Alrighty, folks. So we have a pretty interesting week, to say the least, ahead of us here for the stock market. We have 7 companies set to report earnings that I want to break down in this video. Of course, you guys know the drill. We'll break down the charts, what I'm looking to do with these stocks, if I own them, if I'm planning on buying them. And of course, we'll break down the estimates, EPS, revenue, all that good stuff. Maybe we'll break down the stock market in general a little bit. So if y'all find value, hit that like button. Make sure to subscribe. And by the way, I hope you all had a great weekend. Are having a great Sunday. It's actually about 45, 50 degrees here in Jersey. Not bad. The sun's out, which is nice. We have football, which is always great. It's currently about 11:50 a.m. and right now we have the Colts and the Patriots playing, which I was watching a bit of that game before, and I figured, let me make this quick video. We have some stocks to break down, earnings, so if y'all find value, hit that like button, make sure to subscribe, and follow me on X as well, link down below, or just go on there, type in Stas Talk Stocks, you'll find me. And with that being said, guys, cheers. Let's dive right into the video. So I'm sure you all know at this point, on Friday, the stock market did very well. I'm talking very, very well. The VIX died down about 7% as we had the NASDAQ up over 2%, Russell up over 1%, S&P up 1.5%, the Dow went up 1.15%. So yeah, needless to say, it was a very green day and there was a lot of upside, right? So we're not going to focus too much on the indexes in this video. I feel like I covered them enough in my previous or the video I made before the last video. Either way, we talked about them already. We're starting to break out. You guys get it. We're not going to get into that in this video. I want to focus on, though, these 7 companies, right? The first one being Home Depot, ticker symbol HD. This company set to report earnings, I believe, on Tuesday. Let me double check that here for you guys. Let's see, the 14th in the morning, which is on Tuesday. Today's November 12th, so yeah, they're on Tuesday, the 14th in the morning, and this stock, as you guys probably know, has underperformed the stock market. Maybe not this year, but it's not been doing well at all over the past couple of months. Probably, I think it's probably red on the year, right? Let me double check that. We started off the year at about, let's see, yeah, we're definitely in the red on the year. So this stock was at about 320 in the beginning of the year, and it got down to about 274. Now it's at about 291. So it's very beaten down, and this is one that I was considering, maybe not at 270, but I was thinking to myself, if this were to get down low 200s, maybe under 200, I'd consider it, and we're still a ways away from that. Let's be honest, we're at 290, but if this does fall down a bit more after earnings, maybe this could be one that I'm personally looking to target. Not telling you guys to buy or do anything, but might be worth, for me, looking to add it to my portfolio. I don't know. We'll see. But they're looking to do EPS of $3.58 versus the $4.24 from last year. So EPS is shrinking for Home Depot, and their revenue estimate is $35.66 billion, which I don't have last year's number on the top of my hand or on the top of my head right now, and it's not in my notes. But either way, guys, look, this stock's been struggling. Overall, the chart is not looking good. We're making lower highs, but at the same time, we have support at about, where is this? 280. So if we fall, excuse me, if we fall through 280, this could be slipping even further. You guys can see the low from a couple of years ago. When was this? March of 2021, so almost 3 years ago, was right around 245, 250. So I'm thinking if we fall through 280, 275, 270, we might be going down to 245 on Home Depot. And if it breaks that, like I said before, that's where I'm looking to maybe add some Home Depot. So the next one here is Target, which you guys know has been slaughtered this year. This stock has been through it, guys. This thing was at $175 back in March. Now it's at $108 in November. About 8 months later, it is down $75 per share, or 40%. And you guys can see on the 3-year chart, I think the all-time high, let's see if I'm right, is $260, right? Let me see here for sure. Yeah, 268. Look at that. This thing is down from 268, guys. Holy crap. To 108. That is completely unbelievable. In the past, that's pretty much in the past 2.5, 3 years, it's down 60% for a company like Target, which I guarantee you guys, 5 years ago, if you ask somebody, do you think Target's going to go down 60% in the in the course of the next couple of years or the next 5 years? Somebody would have said there's no shot, right? A lot of people would have said that because this was looked at as a safe, dividend play, kind of like a safe set it and forget it type of stock, at least in my opinion, the way I was looking at it a couple of years ago, right? Things have changed, obviously, but now it's like, holy crap, man, you realize that individual stocks are pretty dangerous, especially if you're all in on a couple. I know some people personally that were heavy on Target stock, and I've never liked it. I've never owned it. I'm not a big fan of these types of stocks anyway, but it's one of those that has just gotten destroyed, and it shows you like, holy crap, maybe I'm not for stock picking, right? I'm not saying me personally, I'm saying in general, people are like, holy crap, man, this thing went down 60%. Who saw that coming? And of course, a lot of it was out of people's hands, and pretty much everything in the stock market is out of your hands at the end of the day, right? But pretty much all of it for the most part. But look, it goes to show that sometimes investing in ETFs is the way to go for a lot of people. Just buying and holding ETFs or holding more individual stocks, not being concentrated on 4 or 5 stocks, Target being one of them, for example, right, hypothetically, and you'd get screwed, right? So sometimes the way I look at it is ETFs are the way to go for most people, or owning or creating your own ETF, in other words, right? Owning your own or buying your own stocks and making your own portfolio, 20, 30, 40 stocks, however many it may be. And I know a lot of people like to do that, which I love doing that. You guys know me, right? So yeah, Target at this point is one worth looking at for this week. They report earnings, I believe, on Wednesday. Let me double check that. Let's see. On the 15th, which is on Wednesday in the morning, they're looking to do $1.48 EPS versus $1.54 from last year. And their sales aren't, you'd think their sales would be declining massively year over year, but they're actually not. Last year they did $26.5 billion roughly, and now they're projected to do $25.3 billion. So we'll see. I mean, it could come in way less than that, but they're only projected to lose or be down 4.6% year over year on revenue. Time will tell. So the next one here, guys, is JD.com, a Chinese big tech name, which this stock, man, has been cut in half in just the past 8 months alone, from $48 to now $25. And on the 1 year chart, you guys can see, wait a second, it was a lot higher back in the beginning of this year. It was at $67 to start this year. Now it's at $25, guys. So these Chinese stocks are a complete dumpster fire. I mean, look, I own Baba. I'm not going to lie to you guys, which we'll talk about here in a minute, but I've not bought any more shares over the past year and a half, pretty much year and a half. I'm pretty much just holding what I got, which is a smaller position. It's not like I'm screwed completely. Like I said, with Target, right? I like diversifying. I'm not one of these guys that goes all in on 4 or 5 stocks. It's not wise in my opinion, for most people at least. I don't know. I mean, if that's your cup of tea, go ahead. But look, I own Baba, which we'll talk about here in a second. I am down in the position, and it is what it is. I mean, look, I knew that going in. It's going to be a rocky couple of years of owning this thing, and let's just say it's been that exactly. Rocky couple of years, but we'll talk about that in a second. We have JD this week, I believe, on Wednesday or Thursday. Let's see here, guys. Wednesday is the 15th, so let's see when they're on. They're on Wednesday in the morning. The 15th pre-market. So JD is looking to do 78 cents EPS, which last year they did 92 cents. All right, they're going to be down on that, and revenue's still going to be massive. They're still making a ton on the top line. $34.15 billion of revenue is the estimate, and we might as well just jump over to Baba right now, which, again, this is a stock that I own, full disclosure, and I was buying it, I don't even remember, because, again, like I said, I haven't bought in a year and a half, but I believe I started buying, let me think here, I think in the high hundreds. I'm not going to lie, like 180. Let's see where it's at now. Yeah, so this thing was at, let me pull up the max chart very quickly so I can show you guys what's going on. So this thing peaked in the end of 2020, and it hit 319, and I didn't buy it there, obviously, guys. I'm not buying the top on this stock, no way. But as it started to get hit aggressively, right, from 319, 250, 200. Once it started going under 200, I was like, all right, massive company, growth company, right? Big tech company in China, which that's the thing there, right, guys? Which we're not going to get into that. Chinese companies have a ton of inherent risk in and of itself, or in and of themselves, right? It is what it is. And I bought in the 180s for sure. Yeah, 190, maybe not 190, probably 180. I forget exactly. But I pretty much bought all the way down 180, 150, 120. Definitely bought in the 80 to 90 to 100 range about a year ago. Because if you guys remember, let me pull up the year chart. This thing has been chopping around $80 for a freaking year almost, right? Let me pull up the 3-year chart actually. Let's see. Yeah, this will show you even better. So about a year ago, right, when it was chopping around 90, 95, 80, 85, I was buying here. So maybe I bought about a year and a half ago. Yeah, because this was May of 2022. So it was chopping around here. Then I had a fake out rally to 130, got destroyed down to 58. Rallied right back up to 120, and now it's been chopping around $80. You guys can see if I pull the 4-hour up, let me pull up the 1 year actually. You can see we have a bit of a descending triangle here, which actually is not good for the bulls. This is actually a very bearish pattern. So if this plays out, guys, we could be seeing more downside. Baba's looking to do 212 EPS versus $1.92 from last year, and revenue is looking to be $30.79 billion. And again, I own the stock. I haven't bought it in about a year, year and a half, and I do not plan on buying more at this point. I'm just holding on. I think my average cost is like 130 or 120, something like that, 25, in that ballpark. So it's not like I'm in this thing at 180 or something crazy average cost. But 120, I'm still down, but it's not that bad. I mean, I'm still going to hold on long term and see how it ends up playing out. And we'll see what the next one here is, guys. Cisco, I believe, CSCO is the ticker. They're looking to do 97 cents EPS versus 86 cents from last year. And they're set to report earnings, it looks like, on the 15th, which is Wednesday after the bell. And you guys can see we do have a bit of a head and shoulders on Cisco, guys. Not the best sign. So again, EPS 97 cents versus 86 cents from last year. And their revenue, $13.79 billion expected versus the $13.31 billion from last year. That would be up 3.6% year over year. So let's see what happens with this one, guys. We have that head and shoulders, like I said, but also we have a wedge in the making, higher lows, lower highs. So let's see what direction Cisco ends up picking. And before we talk about the last 2 stocks, guys, don't forget to get your free stocks from Moomoo, link down below, or by going to stocksurfest.com/Moomoo. Once you guys open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000, by the way, guys. And for a limited time, you also get a free share of SoFi stock on top of those 5 stocks. And listen to this, guys. It gets even better. If you want to up the ante a little bit, fund your account with at least $1,000 on top of those 6 stocks. You get 10 more stocks, and those are also valued up to $2,000, guys. So use that link down below or go to stocksurfest.com/Moomoo. And understand that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, guys, cheers. Let's talk about 2 more stocks, and let's end off the video after that. So Walmart is another massive company set to report earnings this week, and their stock has been crushing it, guys. Absolutely crushing it. And this, if I had to own one of these big box retail giants, whatever you want to call them, if I had to own one of them, it would probably be either Walmart or Costco, right? One of those two, which both always trade, it seems like, very expensive. I mean, they're always premium price stocks. It is what it is, right? It's hard to get them at a discount, but I'm just being real. Walmart is one of those that is a great company, great stock. It's pretty much, I'd say, recession proof, because let's be honest, right? Walmart, their grocery division is growing like crazy. They have cheap clothes, you name it. Everything that you need in life, pretty much, you can buy. Well, not everything, obviously. I mean, geez, I'm exaggerating. But a lot of stuff that you need on a day-to-day basis, you can get it at Walmart, right? And sure, you can make that argument with other places, but Walmart is really the top dog for one of the best prices or some of the best deals out there. So Walmart, they're set to report, I believe, on Thursday. Thursday in the morning. And what do you guys see here? We have an ascending triangle on the 4-hour chart. In other words, this looks like it wants to break out, at least as of now. And let me set my alert while I'm at it at 167, which is right by the highs from last week and from a couple of weeks ago. If that point breaks, guys, we could be taken off. Who knows? Time will tell. Walmart's looking to do $149 billion of revenue, which is just mind-blowing, guys, at this point. And revenue, or EPS, excuse me, is looking to come in at $1.41 versus the $1.50 from last year. So Walmart, let's see what it does at $1.67. And again, full disclosure, I'm not in this one. Hopefully one day I can own it, but it's just one that's always trading expensive pretty much, at least from my perspective. So the next stock here, the last one, guys, is BJ's Wholesale Club. This one's been slowly digging itself out of the earnings pit that it was in a couple of earnings ago, which you guys can see, not last quarter, but the one before that. The company ended up reporting, and mind you, it was downtrending heading into the earnings report, but earnings came out. The stock was at $70. And, well, it went all the way down to $60. And since that point, we've slowly been crawling our way out. But still, guys, we have not filled the gap entirely, which might happen here. Who knows? With earnings coming up, I think on Thursday. Let me double check for BJ's Wholesale Club here, guys. They're on the 17th, so that's what, Friday? Is that Friday? That might be Friday morning. Yep, that's Friday morning. So BJ's is one that I'm looking at here. They're looking to do EPS of 95 cents versus 99 cents from last year, and revenues projected to come in at, let's see, $4.9 billion. Not too bad there, guys. And we can see we are fighting. The bulls are fighting to hold a higher low here. We are maintaining the uptrend, but at the same time, it's it could go either way. We are slightly making lower highs at the same time here. So let's see what we do in this window right here, guys. Does BJ's fill this gap before earnings? Because again, they're on Friday. We'll see. Or do we dump through, which would not be a good sign in my opinion. What do you all think? Let me know your thoughts in the comments. Feel free to hit that like button, subscribe here on YouTube. You might as well follow me on X as well, at Stas Talk Stocks, link down below. And with that being said, guys, cheers. I'll catch you all in the next video.